Hey folks, Simon here. So I have been bombarded with questions about what on earth is going on with GameStop. So I thought I'd talk about it really. So we'll talk about that. What exactly is a short squeeze, because that's what's happening, and what's the potential next GME. So here's the abbreviated version. So GameStop is like a video game retailer. You'll see them in shopping stores all over America. But the thing is, it's a bit of a failing business because it's a bricks and mortars business. COVID has obviously completely destroyed it. And a lot of people are just buying their games online via Steam or the new Apple, the Apple thing. So it hasn't really got many good prospects going. And this is the stock. Now, what happened is that at some point there was a bit of a rally in the stock, and a hedge fund or two and some talking heads, some official financial people said, "Oh, this is a shit stock. We're going to short it. We're shorting it heavily." Blah blah blah. And in Wall Street Bets, it's like a Reddit thread where loads of just everyday people that talk about investing decided to basically teach these hedge funds or give them a bit of their own medicine. So obviously these hedge funds were shorting it big time, so if the price went up it would hurt the hedge funds basically. And so everyone basically just started buying GameStop. So as you can see, it was hovering for around $10 to $15 for most of its life. And then we had liftoff. It went from 20 to 40 very quickly, and then before you know it, it hit 100, and it just didn't stop. And it looked like it had a breather at 145, but then woke up the next morning and it gapped up. Probably one of the biggest gaps I've ever seen in my life. Gapped up to 320, which is nuts, and didn't stop there. And today it's $420. So it's gone from $20 odd to $420 odd in like no time at all, 2 weeks, which is just nuts. And as a result, a hedge fund or two, or more probably, are filing for bankruptcy. So this is really important because it's basically shown us that the big boys are not always in power. So these are basically a whole bunch of Americans, typically I would guess, putting in their stim checks in. And yeah, I've been bombarded with all sorts of stuff, like all sorts of memes. But it's not just everyday people with a couple of £100 in. There are a few big movers in here, which I guess are anti-establishment, so to speak. Because the main person doing it, I forgot his name, has made quite a lot. So this person started off with almost $800,000 and then has turned that into $47 million, and probably a lot higher right now. Which is just nuts. And this person bought in around $12 with his options. And there's all sorts of memes going around. But when we look at the high short interest, so it basically shows us which stocks are verily heavily shorted at the moment. And as you can see, I think this is a bit outdated at the moment, but GameStop was really high there, 138%. So it was being shorted more than the stock exists. And yeah, Virgin's also being heavily shorted, etc., etc. The thing is, what exactly is a short squeeze? Not many people understand that. So, for example, it's not like a spread betting trading platform like I do, etc. So, for example, I've just placed a trade. I wanted to go short on euro, pound, and I did it. It took seconds. It was really simple. However, when you're shorting stocks, actual physical stuff, like we're talking about here with short squeezes, it's a little bit different. So, and this is no different. I mean, like what's happening here at the moment isn't new. I mean, this has been going on for hundreds of years, and it's normal. And in 2017, it was random shit coins, and ICOs and stuff like that. And it's gone full circle, and it's back to shit stocks. And it is a shit stock. GameStop has no fundamentals behind it. This is just an FU to the establishment. So what actually happens? Let's talk about the mechanics, because not many people understand the mechanics. So let's say there's a stock around here, and I'm just going to, for ease of maths, I'm just going to say this is $1. Okay, and let's say over here are two people. We have the hedge fund investment banker, and let's call him Chad. And let's say there's someone with a whole bunch of GME, so GameStop stock. And let's call this person Bob, or Bobinder, whatever you want. Bobinder? I've just made up a new name. Now, let's say Chad has bee up his bonnet about GameStop and wants to short it. But obviously Chad doesn't have any GameStop stock to short. So what he has to go and do is go and borrow a whole bunch of stock. So he searches around and goes, hey, Bob, can I please borrow some of your stock so I can short it, etc. And Bob goes, yeah, sure, you can borrow some of my stock, which you'll be contractually obligated to return, but I'm also going to charge you a bit of a fee. So let's say in this case, Chad borrows, so let's just say borrows, I don't know, 1,000 GME stock, okay? Or 1,000 shares. But the thing is, Chad doesn't have to pay for it up front, okay? So he's borrowed it at, let's just put in brackets here, at $1, okay? So what he actually owes is 1,000 shares. But in return for this, he'll have to pay a premium. And it could be anything, it could be like, I'm just going to pluck something out of my ass here. Let's call it $100 per month. And so for every month that he's doing this deal, he's going to pay Bob $100 a month. So Bob's happy because he knows Bob's going to get his 1,000 shares back, but he's also making $100 a month, so he's getting an extra bit of yield from that. But now Chad has his 1,000 shares, and what does he do? He goes and dumps them and he sells them. And so Chad then ends up with, I don't know, let's just call it $1,000 because he sold at $1. But then what happens is the community rallies around it and goes, no, and starts pumping it, pump. And so let's say it gets to the point where it's now $20. So Chad is in a bit of a sticky wicket right now, because what happens is Chad is obviously paying this premium every month, but he owes 1,000 shares. So Chad is now down because let's say he wants to close his position and goes, right, this is nuts, I need to close out. Chad, because he's already sold these shares, he has to go back into the market and buy 1,000 shares at $20, which means he then has to buy the 1,000 shares at $20. That's $20,000. And let's say he's done this for a month plus the $100 that he's spent. So what happens is, he's effectively, let's say, mind you, he got $1,000 over here. So let's say he's effectively minus $19,100, and he goes, wow, that was a painful experience, game over. And that's if he exited around here. But let's fast forward. This has gone up even worse than this because it's now at 420. So in this crazy example, this hedge fund, this Chad bloke, is now, so let's 420. So what is that? 400? Yeah, it's 420,000. Ignoring the premium, he's now down $420,000. And by the way, this is just a very small example because he's only bought 1,000 shares here, or borrowing 1,000 shares. And so what's happening is a whole bunch of hedge funds actually went and got loans to maintain their position, because it is a good short. Eventually it's going to come, so here's the thing, eventually we're going to see this. It's going to come tumbling back, and it will probably come back with a vengeance back to probably near zero. That is almost a certain. But what we don't know is when. Is it going to do it from here, or is it going to do it from $1,000? But at some point it will heavily crash. But here's the little thing. When they call it a short squeeze, let's just get rid of some of these lines because they're a bit confusing. Okay, so I don't know. Let's just say, for this example, there is a game over line. Okay, and let's say the game over line is the $500 level. Nice big round number. Okay. Now, this is effectively the Chad's stop loss. So Chad has borrowed money, so he's got loans from banks, etc., to facilitate it, etc. But at some point, he'll run out of money, and he'll have to do a forced liquidation at, let's say, $500. And those that are pumping this stock in Wall Street Bets, and thousands, probably tens of thousands of people doing this, they know that there is a period or a level where they have to give up. And so at, say, $500, let's say it rallies all the way up to here, Chad is then going to have to go out and buy 1,000 shares at $500. But what this means is it's actually bullish, and that's why it's called a short squeeze. That these shorters are being squeezed because at some point they have to go back into the market and buy. So they'll have to go and buy 1,000 shares at that level there, which then means we can have an even bigger blow off top. Now, there's two things here. What we don't know whether we've hit this level yet, or what we're experiencing right now is the blow off top, because let's say the game over line was, I don't know, at the $300 level. That could have been the game over line. And then all these hedge funds had to go in and buy huge amounts of stock at crazy prices. They got kicked in the teeth, got their knees kicked in as well whilst they're at it, and a stubbed toe. And this, what we're seeing right now, is that blow off top. So that's what a short squeeze basically is. So in terms of looking at this, that's that. What's the next GME? Well, there's one running at the moment. So we have, if we go back to here, AMC seems to be another one. AMC Entertainment. We had same sort of shizzle, hovering around $5. If we go to the daily chart, we'll see that it has been a shit stock. It's been crashing for freaking ever. And then all of a sudden it pops out of nowhere. Just a bunch of moon boys, probably transferred from the crypto market over to stocks, going, oh, stocks aren't doing much. Cryptos aren't doing much. Let's see what's going on here. So that's another one which again will come crashing down. But here's the thing: when you look at some of these threads, there's someone that proposed a really good one for SLV. Now, this is one I actually quite like, because SLV is a bit of a Ponzi due to fractional reserve selling. So what we're seeing at the moment is SLV, so iShares, SLV, and also GLD. So these are ETF providers, exchange traded fund providers, and what they do is they sell silver or gold. So people can buy shares in this fund effectively, but they do it on a fractional reserve basis. So you would have thought that for every 1 ounce of silver they have in reserves, they've sold that 1 ounce of silver to a punter, to a buyer, but they haven't. It's like, and that's why I call it a fractional reserve selling, because it's fraud effectively. Because at the end of the day, you have a whole bunch of people. It could be 2 people, it could be 100 people, and that's the thing, we don't really know for sure. But let's say there's 10 people here, all thinking they've bought the same 1 ounce of silver. So eventually there's going to be a run on the COMEX, so the commodities exchange, and SLV will go bust, GLD will go bust, and the gold and silver prices will be priced out of Shanghai, and Shanghai will be the commodities market of the world. They got enough to back it. So I find it interesting that this person, I see, when I look at this, I don't think it's just a bunch of gamers going, let's just screw over Chad. As we saw from this screenshot, it's a bit more than just a couple of gamers. There are some switch on people here. So I've read a few articles saying it's just the average Joe flipping the bird to the big boys, but it's not just that. There's a bit more behind it. And so yeah, if you go to Wall Street Bets and look at the SLV, there's a whole bunch of people jumping onto that as well. So it's actually fascinating going through the Reddit, the Wall Street Bets, because it's yeah, look at this. Year is 2030. Wall Street Bets is the largest hedge fund on the planet. Analysts scour Reddit for the hottest memes. So yeah, hopefully that makes sense. Could it be? I mean, let's just have a look at SLV. I think this uptick that we're seeing right now isn't anything to. Yeah, it's gapped up a tiny bit, but this is just normal market movement. If it moves up, great. I mean, I've got physical silver that I've had for a while. I would quite like that to carry on mooning or carry on going up. But yeah, this video is long enough. Hope it helps. Hope it makes sense even. And let's just see. Oh, by the way, just one thing. I think this is a sad thing, because the bad thing that's going on here is that the average Joe, seeing what happened with GME and go, oh my god, I'm going to make millions if I can just jump onto this. So people all over the world are now going to get into very, very bad investing habits and just go around buying shit coins, shit stock after shit stock. That's not good. And I know the mentality is like, well, yeah, if I buy 100 shit companies, one of them's going to do well. Well, most of the time it doesn't. You'll end up buying 100 shit companies and 100 shit companies go to zero, or do nothing for 10 years. And I've been there. I've done this. I've been there. So yeah, this is just one out of millions that have tried to do this. So however, now there's so much of a furor around the internet, there probably will be another one that will go pop. So is AMC in the middle of it? Has it got further to go? I don't know. I'm personally not going to play this game. It's silly. So, see ya.